You can find today's speaker at his new website, sproadmap.com. Please welcome Justin Givler.
Perfect. Thank you so much, Dave. Appreciate you for having me on here. Thank you to Tiger Shark Trading as well. Let's go ahead and go right into it. Welcome in, everybody. Thanks for taking some time to be with me today. What I want to do is share with you my process for how I map out and trade the S&P 500 futures market. So we'll go right into the presentation here. If you have questions throughout, just go ahead and ask them in the chat box. I'll do my best to take a look and see if they're there. Worst comes to worst, I'll get to the end of my whole thing and then we'll look at the questions. So let's go right into it here. I have started a new service called the S&P Roadmap. So you can find the information on that at www.sproadmap.com, like Dave had mentioned. And let's go right into it here. So we've got to start out with our futures trading risk disclosure. As everybody I'm sure is aware, trading is risky. You could lose all or more of your initial capital. And just take this all as educational information. This is not any type of investing advice. So let's go right in. So why would we want to have a pre-market plan? I think it's probably self-explanatory, but we might as well go right through it here. Why do we want to have a roadmap per se for our trading map or trading charts? Well, first of all, we need to have some type of conditions to trade within for the trading day. The last thing you want to do is sit down at your computer with absolutely no plan and just go, oh, I think I see a trade set up, or oh, I'm just going to trade this level. You want to have a consistent process that you follow every single day before you trade so that you can have some type of consistency over time and find things that you need to alter, things that you might want to add to your plan or subtract. And without that consistency day in, day out, you're probably going to have a tough time as a trader. It's tough as it is. So that's one thing. We want to know areas in our chart that are going to be trouble. So if we're in long and we take a long position, we want to know where there might be some trouble for that long position, whether we're coming up into some relevant level or we're going to be testing into some type of signal that has been really strong. We want to know ahead of time so that we can sit down and find trades and know where we need to get in, where we need to get out, where we might want to take profit in case there's some trouble with our position, etc., etc. We want to know what the higher time frames are telling us, right? We want to have some type of context for where we're going to go in the market, and usually the higher time frames are going to give us a little bit more of a stronger visual idea as to what's going to be happening going into the future. If you just stick down to a 1 minute chart, you're going to lose the larger perspective that maybe we're actually in a strong bearish move and you see a very, very short time frame bullish signal. That's usually going to be a clue for maybe a correction, but not for the larger move. So we want to know what those higher time frames are telling us. And then we want to use all this to create a bias for the trading day and a plan for what we want to do again before we start putting risk on the market. Okay, so how do I go about doing it? I'm sure everybody has their own way of doing it. I'm going to share with you today how I go about it. And first thing I do before I even worry about doing any type of analysis on the market is I want to look at, are there any planned news events happening that morning, right? So do we have anything on the calendar that could be influential on the market, right? And since we're talking about the S&P 500, primarily we're looking at news that's relevant to the US market specifically, but that doesn't mean if there's something else going on internationally, you know, as far as planned news events, that those won't also have an effect. So I always go in before I do any type of analysis and I just mark on my chart the different times when specific news events will be announced. If anyone has spent even a day or two in the markets, you're going to see that when certain planned news events are dropped, there's a jump in volatility in the market. And the last thing you want to do is lose sight or lose context of that time, where you are in relation to that time, and then go ahead and put a trade on, and all of a sudden the news hits, and your stop gets hit, and in fact it actually goes beyond your stop, takes you out for 2 or 3 times what you initially were willing to risk. So that's one of the first things I'm going to do. The next thing I do, and what we're going to do here is I'm going to go through the steps, you know, kind of like the classroom version of this. I want to go through the steps of everything I do. Then I want to take it to the actual charts, and maybe what we can do is pretend like the market is opening right now and actually do a pre-market based on the data that we have, you know, as of the close that just happened about 5-10 minutes ago. So we're just going to go through these basic ideas, and then we're going to actually go to the charts and see, you know, see how this is actually done. So I will then go up to my daily and my weekly, which are the 2 time frames above the intraday time frame, right? So when I'm trading intraday, I want to have at least 2 time frames above that, giving me some context for what's going on in the market. So those are the first 2 time frames I will look at to consider certain signals that I'm looking at, looking for what the candlesticks might be saying from the previous day or the previous week. And then I'm going to start IDing and marking relevant high time frame and multiple time frame signals. So high time frame signals, what do we mean by that? We're just simply talking about what does the daily say, what does the weekly say, maybe even what does the monthly say, and then down below that, maybe what the hourly and the 4-hour time frames are telling us in terms of signals. And if you know anything about my trading, I have been here before. I believe maybe 6 months back, I did a webinar for Tiger Shark, and it was on how I scalp the S&P using my shortest time frame, right? So I want to look at that stuff, and then we're going to want to map out the larger Fibonacci leg. So for those who are familiar with my pre-markets from the past, I'm always looking into what current leg are we in, what is the next leg beyond that, and then what is the larger leg that we might be trading within. So we're going to map those out as well. And then we're going to map out relevant levels in the market. And so for me, that typically is going to include something known as scaffolding, which is just kind of a proprietary term for strong support and resistance levels in the market. And then I'm looking out for major swings and anything else that might be relevant that I can see up on a 60-minute chart. And then finally, right before the open, I jump down to my shortest time frame charts, and I map out any relevant things that might be happening there, including looking at our fast moving average and our slower moving average on the short time frame chart. Now, once we get all the levels and all the signals mapped out, which we're going to go ahead and do here in just a few minutes, we'll create a bias and a plan for what direction we would want to trade based on what happens. And remember that because the market is, you know, there's no way to truly predict 100% what's going to happen next. We need to have, and that's probably the next couple bullet points here, is we're going to want to have conditions for our trading. So if something does happen, then we will do this, right? We have a contingency plan for when things don't happen the way we would expect, given the signals and levels that we're working with. So we'll have that plan for what we expect to happen and how we would trade that. And then we'll have a plan for when those things are not working out. I always say this to my traders, whenever we're dealing with trading, it's always just a series of if-then statements. So if, say, this level holds, then maybe we want to do this, right? If this signal holds, then if this signal doesn't hold and this level breaks, then we want to do this, right? So we always want to understand that the market is always changing and there's always new data coming in, new news events coming in, new players, big players coming in. And all those different things, there's so many different factors playing, that's going to affect changes in the market. And there's no way to predict a brand new news event. There's no way to predict whether or not a whale is going to come in and start moving the market one way or the other. And so basically what we're doing is we're just reacting to what's happening and mitigating our risk and following a basic rubric or a basic kind of guideline or roadmap as to where we would want to put trades on the market, where we would want to take profit, and maybe where we would want to stay out of the market. So with all that being said, that's basically it, right? We want to have a consistent plan every single morning, doing the exact same things, assuming you have something that has an edge to it, and then you're watching it play out day in, day out, continuing to mitigate your risk and make sure that you're putting your trades on and taking them off, and the most highly probable areas for success. So I'm going to pull the PowerPoint off here, and we're going to go up to the charts. And again, the first thing, so bullet point number 1 is I want to mark news on my shortest time frame chart. So when I'm trading, I'm typically trading with my shortest time frame up in addition to other time frames as well, right? So I've got my tick chart, I've also got a 3-minute chart, a 30-minute chart, and a couple charts in between those time frames, so I can see the market from multiple vantage points, right? So it might be down at ground floor here on the 512, I might be up on the 10th floor on my 30-minute chart, and I might be up on the skyscraper looking down when I'm looking at my hourly or my 4-hour chart. So those are the time frames I'm looking at. But on the shortest time frame, this is really where I'm trying to find specific trade setups. And as you can see beautifully at the end of the day here, beautiful parry right off our 200 moving average. And that's one of our textbook trades, is a extension out, pull back to hold the 200 and bounce. So there have been some pretty decent moves here today. But anyway, I digress. So let's look at today's news. And what I normally do is I keep it very, very basic. I don't go to Forex Factory. I don't go to some of these websites where there's, you know, hundreds of different news events listed out. I stick to a very basic layout, and that is just to go to the us.econoday.com website. It's free. They update it every week with new news, relevant information. And I come here and I basically just look, do we have CPI coming out? Do we have maybe jobless claims or some other relevant things, including maybe even just the release of the Treasury statement or the Fed balance sheet? These are things that have an influence on the market. So I'll come in. It just so happens this week, Monday and Tuesday, nothing too relevant. I'm mostly looking at these red and green dotted news events. So you guys, if you've been in the futures market for a couple months, I'm sure you've heard consumer sentiment a few times. I'm sure you heard about the Fed balance sheet being released. I'm pretty sure you better be aware of CPI or jobless claims. These type of things all seem to have a strong influence on the S&P 500. And that doesn't necessarily mean that this news means the market's going to rotate when the news is released and push 100 points on the ES. But what it means is there could be a jump in volatility. And what does that mean? That means we could have, and I don't think from this week, there's nothing super relevant in terms of finding a spike. But what you might find is the market's trading here, and then the news gets released and it just shoots up 10, 20 points. Then it shoots down 10, 20 points, and all within a couple seconds, and then it settles out and starts coming back to normal. And so we don't want to be placing a trade or be in a trade just before a news release, because it could jump up, jump down, go right past our stop and take us out of the market for more than we really wanted. Of course, the flip side of that is going to be it jumps in our favor and it fills us at a much higher price than, or lower price than we expected, and we make more money than we expected on the trade. But anyone who's been in this game for a little understands that most of the time it's the other way. It's usually you're losing a little bit of money. So I'll go in and very simply, I trade everything through NinjaTrader. So all of my charts are on NinjaTrader. All the drawings, all the indicators I use are all customized to the NinjaTrader platform. And so if you happen to be using NinjaTrader, they've got this function F7 that draws a horizontal line on the screen at a discrete time in the market. So what I'll go in right to the line, and I'll just say, hey, the anchor as far as the level doesn't matter, but I want to go in and specify, let's say we have a news event coming out at say 7 a.m., I'm going to want to go in and make sure this is set for 7 a.m. And then I'm plotting it on my short time frame chart so that as we're coming into that time, I'm visually, you know, I'm given a visual clue that we're coming into a potential jump in volatility, right? So I do that for each individual news event. On some days, like I said, there's nothing super relevant for me to mark. On other days, for instance, maybe on Friday of this week, I'm going to want to go in and mark that 10 a.m. Eastern, 7 a.m. Pacific. I am on the Pacific, so I always have to convert. I'm going to want to go ahead and mark that time so that I'm aware if I get caught up in the weeds here on a short time frame, I'm aware ahead of time that we're coming up into that news drop. Okay, so that's the first thing I do. Second thing I do is I go to the higher time frames. So I'm going to go and get my higher time frame charts here, and I go up and I see what does my daily and my weekly time frame have to say. And in this, for this, I guess I might as well just go into all of it. What I look for is what the candlestick from the previous, say, week or previous day has to say, and then I look for relevant signals that might be setting up on those higher time frame charts. So for example, this is actually a great example. When we came into the market on Monday morning, this is what we saw on our charts. We saw, obviously, we're in a very strong bullish push, at least for the last, say, couple of months. We've been continuing to push. We finally broke out of this major resistance spot in the market right around 4,200, 4,250 here, which happened to be the 50% retracement of the sell-off from the all-time high here. And we finally broke out through it. And as we got up into the 61.8, actually got through the 61.8 as well. So this is what we saw in our weekly when we came into the open on Monday. We saw the last candle had pushed to a slightly higher high. I started to see the beginnings of a divergence from those highs. And so we watched that and monitored that as we came into Monday. And so far, as you can see, Monday and Tuesday this week, we have pulled back and essentially retraced that previous weekly candle, or at least the last two weekly candles, by a little bit here, right? So we actually are getting follow through, and this was actually the high of 2 Fridays ago. And then last week, you can see we did sell off, and we found a little bit of support around 50% of this, what I call my signal candle. When the signal started to form, it started showing from this candlestick, and then assuming we can't get through that high, we're going to actually have some confirmation once we can break the low of that signal candle, right? So far, coming into this week, right, we're now in Tuesday of this week, we looked at the previous week and saw we got the follow through. However, we were holding right around 50% of the signal candle, right? So what we want to see coming into this week, if there's going to be follow through from a potential bearish signal from the highs of 2 weeks ago, we want to see the market continue to travel lower and ideally break the low of the signal candle itself, right? So coming into this week here, this is what we saw. We saw that we got continuation from 2 Fridays ago, and we saw we actually broke the low of last week, coming in, I believe, onto Monday there. So everything looked like we were getting continuation from the high of 2 weeks ago. And again, it'll all change. Remember, it's conditional in the market if the bulls can go ahead and rip through that high. If the bulls end up getting through the high of the signal candle, well, then that whole thing is done with, right? We got to reconsider what we're working with. But so far, so good. For the last 2 weeks, we haven't been able to get through the high of this candlestick here where the signal started to form. And now what we're expecting from that is a continuation lower. Okay, so on the weekly here, again, I'm looking for specific candlestick patterns. I'm looking for divergence patterns. And then I'm just looking at what that previous week's candlestick looked like, right? Obviously a very bearish looking candle last week. And so all of that coming into Monday was a clue for what we wanted to do, okay? Now you can see this is the current weekly candle still in play. We still have 3 more days of price action before this actually closes. Still a lot of time for this candlestick to change. And so we're going to have to continue to monitor this. So that's the first thing I do when I come into the new week, especially, is see what is that weekly chart saying. We got a bearish candlestick coming out of what is a potential bearish signal from 2 Fridays ago's highs. And so that is somewhat of a bearish clue until we can get up through that high. All right, so there's the weekly. On the daily, and this is really what gave us our clue for the pullback, because the weekly, again, was not a nice close signal. We just saw the potential for a bearish pullback off that high. The daily is really what sealed the deal for us in terms of being bears after that major high we made back on the Friday before July 4th. And that is because we came up and we made this new high in the market for the year. It popped up just a little bit higher than the high we made at about mid-June there before the sell-off. And we were getting potential bearish signals from that high. So when we came into the market, actually on the week of July 4th, we came in and we talked about this being a very clear bearish pattern, that if we don't break the high of the signal candle of the daily, which was up here just a couple ticks above our scaffolding level here, then we were expecting a pullback. Okay, and then again, from that weekly candle that was coinciding with the high on the daily over here, we were getting a lot of bearish clues. And what ended up happening was we got our pullback from that area, from the high of Friday of 2 weeks ago. And that was the expectation given the signals we were seeing. So coming into this week, in fact, coming into this morning, what happened was we got a counter signal from the low of Monday. So the whole pullback, which we can see up on the weekly here as being this very red looking candle, coming into the new week here, this is now this week, on our daily, we actually got a counter signal on Monday. So as of the close of Monday, we had a beautiful potential bullish signal forming off that low. So that told me not only the signal, but the candlestick itself told me there's a good clue coming into Tuesday, which was today. There was a good clue for the bulls to try to break out to the upside and get through the high of that candlestick right there, right? The signal candle where we got our bullish signal from the lows gave us some clues for a breakout to the upside. And this morning, exactly what we expected, a break through the high of the signal candle, an attempt by the bulls to push higher, is exactly what happened here. So we're using these signals, we're using the actual candlestick interpretation itself as clues for what we would expect to happen coming into the next day, right? So coming into this morning, we had a beautiful bullish looking candlestick, huge doji to the downside, I guess you could call that a hammer, and a nice bullish signal from that low. So that's what gave us some clues for the bulls this morning. And that's what I'm doing here when I look at my daily and my weekly charts. I'm seeing, do we have some signals that are showing up? Do we have specific candlestick patterns, or are the candlesticks themselves hinting at potential rotations or reversals in and of themselves? And then we're using that to help build a context when we go into the shorter time frames here to start looking for trade setups. So to kind of put it all together here, coming into this week, remember we were coming off of a bearish potential weekly signal. We did come down in the week of July 4th and sell off as that expectation, again, off that nice daily bearish signal from the high of the year. We pulled back, and then it just so happens on Monday of this week, we got a counter signal on the daily time frame. And so that whole sell-off that we were expecting from this potential weekly bearish signal and from this really clear daily bearish signal that actually was an official signal, we actually got our counter signal. So that told us that although we had a bearish feel for the market for the whole week of July 4th, coming into this week, we actually got our first clue that a rotation would make sense. Okay, so we got the bullish signal there. Then what I like to do is go to my hourly and my 4-hour charts and see, do we have any signals that might be bolstering that daily signal? So if I got a daily signal from the lows Do I also get a hourly bullish signal from that same low? Do I get a 4-hour bullish signal from that low? And when the hourly, the 4-hour, and the daily all give the same signal, and remember on the daily, it's just going to be potential. It's not official close signal just yet because we have to wait for the next day to develop and close, but we have potential on the daily, and then we have the hourly and 4-hour showing a signal. That's typically where we're going to get a major rotation in the market, when all three of these upper time frames agree. And so we got that basically from the highs. Well, we got it back here and towards the end of June. We got a nice clear, this was a higher time frame bearish signal at the end of June there, going into the beginning of July. And now we're getting a counter signal for the bulls on this pullback from the low of the week so far, and we're getting the hourly, 4-hour, and daily agreeing. So this whole bounce that we got ever since Monday's close, or even arguably from the low of Monday, we had the nice hourly signal down there. We have gotten a beautiful, what I guess you could call a retracement of the leg down. And so these are the things that I'm looking at just from a candlestick and a signal perspective. Before I ever go and start looking for some levels on the market or anything else, I want to see, do I have any confluence of signals from specific areas on the chart? And what makes it even sexier is if it's actually a rotation off of one of the levels that we look at on the market. So sometimes we come right into a retracement level. You can see these circled areas in the chart. These are all times when the market came right to a retracement, nearly to the tick, if not to the tick, and rotated off of it. And sometimes that rotation happens to be the major turn. In fact, I think the sexiest thing to happen so far since we started the S&P Roadmap service is this rotation right here back on June 26th. Because before we ever made it down to that area, we were watching this level right here, 43.69 quarter down to 43.67 half. We had a 2-point pocket here that I told our members for about 2 weeks, as we continued to get closer, that pocket right there and this pocket here from 45 to 48 were the two pockets I thought were probably the highest probability for a bounce. And what ended up happening? We came down nearly to the tick off that level. There's 69 quarter, there's the bounce 68 half, right inside of that 2-point pocket. And that was the beginning of the major rotation back up. So if we go up to our daily, that's this signal right here, where we began the push to a new all-time high for the year, or a new yearly high. I shouldn't say new all-time high. So if we have signals all lining up, and it just so happens they're at one of our levels or one of our pockets of expected support or resistance, then that's more icing on the cake for the expectation of that move, right? So we haven't talked about levels just yet. I just wanted to lay the foundation of looking at higher time frame signals. When you find a confluence of higher time frame signals, when you have the hourly, you have the 4-hour, maybe even have that daily showing some potential in the same direction of the other two signals, that's where you're going to get your biggest rotation. So if you're a swing trader and you're looking for big moves, all you basically have to do is come up to your hourly, 4-hour, and daily and find when they start to all align and the stars start to come together. And that's where you're going to want to place your swing trades. And if you would have done it back on Monday of July, before July 4th, you would have caught this, just about 100-point sell-off. If you would have caught it long back on, again, whatever day that was, June 26th, and maybe you were late, but you got in, say, 43.90, you got yourself another 100-point pop up to our next resistance area, which was that next scaffolding up there. So again, if you zoom out and look at the bigger picture, this is the daily. Every single major rotation, not every, but almost every major rotation on the chart has a daily signal leading it. So if you could just get used to finding potential setups on the daily, looking for divergence and seeing if the hourly and the 4-hour are in agreement, at that point in the chart, that's where you're going to probably find the largest pushes in the market. Now, sometimes the market is going to get a push, but it's going to be kind of a back and forth chop fest. And there's no way to avoid that. There's no way to avoid whether or not the market's going to chop up and down for a couple days or a couple weeks and be in a very tight balanced area of the chart, or it's going to be the low, right, like right here, that begins a 200, 300, 400, 500, 600 point push, right? So the key thing is to be aware of when you have those three key high time frames all agreeing on a signal. For all we know, right now, you guys could be here for the beginning of the next breakout to new highs for the year. I don't want to prognosticate and say that we are guaranteed a move to break the yearly high and push to a new yearly high, but right now, that's what the cards have in them right now. We have a clear daily bullish signal from that low. We broke the high of that signal candle, so now it's official signal for the daily, and we have the hourly and the 4-hour bolstering that signal as well. So we're going to see now over the next, I guess, 3, 4, 5 days, maybe to the end of the week, are the bulls going to have the strength here to actually go ahead and rip things higher? And I can't tell you with any confidence whether or not they are going to. All I can tell you is that my charts have all the signals in place that would be there at the beginning of a major push, right? So we don't know if the bears are going to jump right back in here and they're going to just kind of pop, you know, maybe we'll get one more pop and they just rip it back down. That could always happen, right? We don't know what's going to happen next, but the cards are all showing that the potential is for a bounce right now. Okay, so that's what I'm doing up here when I look at my signals on the high time frames, is I'm giving myself a little bit of a bias for direction. After I get all these signals up and I find sometimes nothing lines up, like we could have came in this morning or on Monday and we could have had no alignment of signals, and that's perfectly fine. We don't need to have an alignment of the higher time frame signals in order to trade. We just want to be aware of when they're setting up, right? So if we're not aware of them, then we're just shooting in the breeze. But when we start to have some type of signal building up, it's giving us some clues for what we want to do that trading day. And again, like I said, some days we're not going to have an alignment. We're not going to have the stars aligning for the perfect type of setup. And in that case, then we're going to have some other context for how we're going to trade the market given specific levels in the market. So let's go down now, and what I typically do is I'll start at the hourly chart, which gives me kind of a good overview of what things look like from maybe a little bit of the shorter time frame, but also the larger context in the chart. So what I do is after I have my signals on the chart, I'm now going to want to consider what Fibonacci legs are we currently trading within, right? So we've got big, and I'll zoom out maybe to a 4-hour here. We've got these huge pushes that are technically fib legs. I think I even marked it on the hourly chart here, or the daily chart. Yeah. So you can see there's, you know, from this major rotation all the way up to the new new yearly high in the market, we've got a leg up there. We've got a smaller little leg up here. And then when we get into the shorter time frames, we've got even smaller fib legs that we're currently in, right? So we've got basically we've got this high here, the high of the year, down to this low, and that's a fib leg down, right? So we've got to consider from the high of the year all the way down to the low of the pullback and the rotation, what 3 fib legs or what 3 fib retracements do we want to be aware of? I don't look at the 23.6 and the, you know, I forget all of them now, 78 point whatever. I just look at the 3 standard retracement levels. I look for the 61.8, the 50, and the 38. Those are the only 3 that I mark on my chart. Yeah, I got my 75 that I always kind of look at, but I'm looking at 61, 50, and 38. And those are the fib legs I'm going to put on the chart. So from the all-time high, or from the yearly high down to the low we made where we got the daily, 4-hour, and hourly signals, I throw my fib up, and what that gave us coming into this week was it gave us what, 98 all the way down. It gave us a 38% retracement right here. It gave us a 50% retracement right here, and it gave us a 61.8 retracement right here. Okay, so before we ever even bounced, or significantly bounced, before the market had even opened that day on Monday morning, we put our fib up from 44.98, the high of the year, all the way down to the new low we were at. And it gave us 3 levels. It gave us the 38, it gave us this 50 right around here, and it gave us our 61.8 right around here. So why do we have these levels on the chart? We have these levels on the chart because they're very, very highly, or there are areas in the chart where we typically see rotations. Okay, so it just so happened, I just want to show you here as an example. And by the way, if you just zoom back a couple days ago, we had the fib from there all the way down to the low of July 6th. And sure enough, I want to show you here what happened. We came right to the 38% retracement. You see it circled there. Go ahead and zoom in a little bit more. And we failed and sold off going into the overnight session of July 7th. Okay, so beautiful hold off the 38 there. If we zoom up to this week and we go back to Monday, again, you throw that fib across from the high of the year down. We failed on Monday just a couple ticks above, or I guess 2 points above the 38, and got this significant pullback from there. Okay, and then if you were following the fib for the leg up, we pulled back and we held the 61.8. So if let me get rid of all that, and you zoom in there, the market made a leg up, pulled back, and came right to the 61.8 there. You can see broke it by 2 or 3 ticks, and then began its rotation back up. So it held the 38 retrace of the push down right there. And then as it pulled back, if you drew your fib for that leg up, it ended up holding the 61.8 nearly to the tick for the attempt to break out higher. Okay, so let's look at this from the perspective of fibs. Again, drawing the fib from the high of the year all the way down to Monday's low here. Look what happened at the 50% retrace yesterday, or actually in the overnight session. So in our overnight session last night, the high of the overnight session for a little while there was the 50% retrace, again, nearly to the tick. So as you can see, the market sold off from 44.98, bounced, and then rejected off the 38, pulled back, held that fib retracement right there, popped to the 50, held it to the tick, and we had these levels on our chart since Monday. And then finally, in today's session, the high of the morning there was the 61.8 retrace, I think actually to the freaking tick. Now, we didn't hold and sell off all the way back down to the lows here, but the most significant pullback that we got this morning was directly off the 61.8. I can go ahead and zoom all the way in. It was literally to the tick, almost like we did from the 50, almost like we did from the 38. Okay, and then we pulled back, and maybe we even held the retracement of this morning session at the 61.8 right there, actually to the tick, and we are continuing to push higher now. So that is why, and that was just a long-winded way of giving you an example of why I watch these fib legs, because day in, day out, I see rotations off of these levels to the tick in many instances happen just, again, hour by hour when you're watching this stuff. In fact, this morning we pulled back and we bounced 1 point in front of the 38% retracement of this whole push up. So if you were watching this whole fib, we came all the way up to that high, we pulled back, and again, 1 point, actually it was, 1 point in front of the 38 retrace, and we rotated back up to come up and fail off the 61.8 of the larger leg that we were pushing back up into. Okay, so this is why I like fibs, because they work and they give me very low, kind of low risk areas to find opportunities for trades. Because if they hold these levels, they're typically holding them within a few ticks, a few points, and turning. right? So I can rely on these levels as high, areas where I can find really good trade setups that I don't have to accept a lot of risk on, right? I don't need to worry about the market coming all the way up to here and keeping my risk above there. My risk is basically right above this level somewhere, because if it's going to work and it's going to hold, it's more than likely going to hold and pull back from that level. Okay, so I map out, once I have all my high time frame signals, I come up here and I map out these levels. So this morning in our pre-market, we had 61.8 as the final level. We had already hit the 50% in the overnight session. We had already hit the 38% retracement in yesterday's market on Monday morning there. So the only level we had left was the 61.8 coming into this morning's open. And this morning's open was somewhere right around this area over here, okay? So not only do I look at the leg down, so the bigger leg down that we're currently pushing up into, but I also look at what are the fib legs for if we fail lower, right? So we have fibs for the way up. That was the 38, the 50, and the 61 in this context right here. And then I look at what is going on below us. So if the market starts to sell off from the current high from today, basically, I want to know where my 38, my 50, and my 61 are for that specific leg. And then I want to consider the bigger leg that we're currently trading in, which, by the way, was, again, from that major rotation we talked about 5-10 minutes ago off our support level here all the way up to this high. And it just so happens that the 61.8 we basically held, again, with about a point in front of it. We bounced a couple days ago, and we've already peeked through it again to make this new low here on Monday. So basically the fib leg of this push up that we've already retraced and bounced from is done with, right? We've already tested around the 50 or the 38. In fact, it went right through the 38, right through the 50, and came to the 61, held, bounced, bears came back in, we pushed a little lower and bounced again. And notice we just broke the high at the end of the day. We just broke this major high in the market. So this is another slight clue that the bullish bias we've had since we made the low on Monday might be coming to fruition here for a bigger breakout to the upside. That would be that first sign as we break through this high. All right, so this bigger leg that we're currently pulling back into right now is basically done with, right? We already tested, we disrespected the 38 and the 50 and went right through it, at least from a 60-minute perspective. I can't see on a shorter time frame if we bounced a little bit from those areas, but we went through and held the 61 and then came and retested and pushed through the 61. So this leg is done. Now I want to consider what are the bigger legs that we're currently trading in, and it just so happens right now the next major leg we're in is from the lows around 41.06 up to, again, the yearly high at 44.98, and that gives us our next three major fibs below. All right, so once I have all of these little fib legs figured out and marked up, now I'm going to go ahead and start looking into what levels do I want to be aware of in terms of potential strong support and resistance in the market. So first things first, we're going to cover what I consider the most basic levels that we look at, and then we'll go into the others. So if you zoom all the way out, and maybe we'll do it here on the 4-hour, and you look at what the market has done over the course of multiple months and multiple years, maybe, assuming you have enough data loaded up, you're going to notice that there are very discrete areas on the chart where we get rotations, right? Where the market will make large moves and then turn very discreetly off specific areas in the chart. And all these really are just strong support and resistance levels. So what I do is I go back, again, considering years, if I can, years of price action, and I look for the strongest support and resistance levels in the market. Okay, and these are areas where typically we see the market come up into, find a major hold and turn, you know, for the bullish side or the bearish side. And when I do this when the new contract comes out. So For those who are familiar with trading the S&P futures market, every 3 months the contract expires and we roll over into the next quarterly contract or 3-month contract. When that happens, the data all gets skewed and gets moved, right? We have a spread between the closing contract and the new 3-month contract, and so everything changes, and I have to come back and go back to the historical data and start plotting out where all these levels are on the new contract. And so I do that, and I do it again based on what the market has done in the past. So I come back and I find areas where, again, we're finding big rotations that are not only support in the market, but then end up becoming major resistances in the future. Okay, and when you build up what I call my market scaffolding, basically the backbone or the guide, the like scaffolding of the market, then when we go into the future, we typically see those levels continue to hold for major rotations. So just as a clue here, this high up here around 44.92.5, going back into the past, and unfortunately don't have the time to go and scrutinize and zoom in and show you everything here, but it just so happens that that level was very relevant in the past. And then coming into this new contract, we came up and we found resistance off of it at the beginning or mid-June there. And then here coming into the July 4th week, we could not get through that level. And it wasn't even just like sloppy. I mean, it was holding this level to the tick. And on many instances, in one case, yeah, we got a 2, 3, 4 point move through it, and then we just could not get through, right? And then when we sold off this level right here, interestingly enough, the whole beginning of the July 4th week, we literally traded back and forth. Whoops, wrong button there. We literally traded back and forth between the scaffolding. It came right down to this one, came back up to this one, and then it was super choppy, continuing to resist off that. And then finally we broke through this lower scaffolding level to come lower, right? So it kind of peaked through. We actually held it nice and discreetly there for a bounce on the July 5th. And then finally we sold off and started coming lower. And this next scaffolding did not work out beautifully here, but it's not always going to work perfectly, as anybody who's traded for a day or two understands. It doesn't always work 100% of the time, but it gives us a roadmap, right? It gives us areas in the chart that we can expect to be major support or major resistance. And you can even see as we sold off here from the 44.92 area, this scaffolding area, we came down and we actually held into the scaffolding down over here for almost an entire day. And then finally they peaked through, and then you can't see it on a 4-hour chart, but got through and then held the back end of it for resistance for multiple hours until it finally broke through and came up to the next scaffolding level up here and found resistance for quite a long period of time until it finally got up through it and broke up back up. So I come through and I get all of these scaffolding levels on my chart. They are my higher time frame strong support and resistance levels. Then I come in here and I go back to my hourly because I get a better view of the shorter and the higher time frames. And I look for my daily power levels. So once I have my fib levels up and I have my larger support and resistance areas up on the chart, I then look into what are the levels that are relevant from the previous daily candle. So if you go up to the daily and we look at, for instance, yesterday, we had a high from yesterday around here. We had a low from yesterday right around here. And then 50% of that range was, I guess, somewhere right around here. I want to know where those levels are when I'm intraday trading, because if I have a bullish signal from the low of that candle, I want to see the bulls hold above 50% of that candle and ideally get through the high of that candle in order for that signal to follow through. So when I'm down here on a shorter time frame, I want to see where's 50% right there, magenta line. Where's the high of the day before? Right there, my red line. Where's the low of the day before? Right there, green line. So as I'm trading on my, and let's see if I can get the 512 up, as I'm trading here on a very short time frame, I know where I am in relation to the previous day. And not only that, these levels, 50% of the previous day, in fact, I can't look at today because we broke out and we didn't come back into the previous daily range. Let's go back to an example here when we were trading within a previous daily range. So like maybe over here. And what happens is we end up finding that, say, 50% of the previous day, this magenta line ends up being a major resistance point for the bulls when they're trying to break out, right? They lead to pullbacks. We come up, we test into it twice here, a third time and pull back. And then finally, there's that textbook hold off the 200 and we break out through that level. So the 50% level of the previous day's price action, extremely relevant and important, not only for scalp trades or trade entries for low risk turns, but also for context. If the low over here was giving us a bunch of bullish signals on the higher time frames, and I see the bulls get through 50% of the previous day from that bullish signal, well, now I have more confidence that my bullish bias is continuing to follow through, right? And then you can see here some beautiful holds off our fast moving average the whole way up. Even came right back to the 200 to bounce for one final hurrah before the bears took over and brought the market back lower. And when it came back lower, where did we bounce? 50% of the previous day. Right there, magenta line also was my VWAP here. And we got an attempt to actually bounce higher, but they got rejection off the FMA and continue going lower. So these levels, 50% of the previous day, let me go back here to a range that we can see, 50% of the previous day, the high of the day before, very, very relevant, and then the low of the day before in green. Those are the next most relevant levels that I'm going to be trading around and within when the market opens on my short time frames. So I get my high, low 50%. I also get the close of the day before, the close of the extended trading hours. I don't know why. I just see this work many times a week where the market retraces right back to the close of the day before and then gets a major rotation from there. And there might even be some beautiful examples from the last couple days. I remember we had some beautiful examples. Now to cut through here, here's a great example. We came into the open a couple days ago. The market popped right around 50% of the previous week, which is this dash dot magenta line, and failed right off the close of the day before. Again, a very low risk area for a rotation, because if it holds that level, it's typically holding it within a couple points and turning for the bigger rotation. So the close of the day before there, also very, very important from the previous daily power levels that I look at. The final level that I look at is the Holy Orange power level, which I have called the HOPL, H-O-P-L, and that's a proprietary level. So pretty much everything you've seen so far is straightforward stuff, maybe outside of my scaffolding levels that I personally pick on the market, but they are straightforward support and resistance levels. The other level would be this proprietary, and then of course the daily high, daily low, close. That's all stuff you guys can get. The only proprietary level I'm working with is this Holy Orange power level, and that level, it shifts every day. It's based on overnight price action. And again, the reason we look at this level is because we get really incredible rotations off of it. Now, I don't know if we have great examples here from the last couple of days. Here is, well, this is not applicable because it was overnight. This level plots at 3 o'clock in the morning on the Pacific, 6 o'clock in the morning on the East Coast. What we see though is a lot of times beautiful rotations right off that level. Like I said, I don't know if I have a perfect example for you here from the last couple days, but that as well is the other level I'm looking at. So to kind of put it all together and maybe wrap this up now, is we're looking for major retracement levels in the market. And I'll go back to my hourly chart here. We're looking for major retracement levels. That includes like the stuff we were talking about at the beginning of this section of my presentation. What are the bigger retracements for the larger legs? We're looking for strong support and resistance in the market based off of previous price action going back over the last couple of months and last couple of years. And we're building out those levels because going into the future, we see those levels continue to work incredibly well. And then we're looking at the daily power levels, which are the high of the day before, the low of the day before, 50% of the day before, and the close of the day before, right? And then after the close, like I said, I also have my Hopal. It just so happens that Hopal today was right there by the high of the day before and the close of the day before. It was very close together. Some days, you know, your Hopal is going to be way out away from some of the other levels. It all depends on where the market was trading in the overnight session, because that's how it's calculating. It's going off of the overnight price action, doing a calculation, and then plotting that level. And you will be blown away how many times the market comes right to it and rotates for a 20, 30 point pullback off of it. So those are the levels. Once we have our levels and we have our higher time frame or multiple time frame signals, we can now start to create a bias for what we want to do in the morning. So I'm going to talk about what we did this morning. So this morning we had some pullback levels, some retracement levels that would make sense if the market was to pull back out of the open and we didn't create some new high or something. We had our retracement back up, which was the 61.8 retrace here at 44.6475. We had our scaffolding levels kind of smacked a couple areas above us and then a couple areas below us. And then we had our shortest time frame, which I haven't talked about. We'll talk about that in a minute. And then we had our signal from Monday's low. Remember, we said the daily had a bullish signal from Monday's low. The 4-hour was agreeing, again, not necessarily my favorite signal from the 4-hour, but it was there. And then the hourly had a nice, beautiful, clean local bullish signal from there as well. And coming into the open, we had pushed from that signal, pulled back, held 61.8 of that leg, pushed to a new high. We broke out through the high of the signal candle, the day before's candle. And so coming into this morning, we had a clue that it would make sense for the bulls to continue to push higher. Okay, so let's look at actually the shortest time frame and take a look here at what happened this morning. And just make sure I'm on the right day here at the right time. So we opened at 6:30. Let me get rid of this. We opened at 6:30. The market failed off 50% of the previous week, which again is that really important level we want to see the bulls get through. They pulled back, and yes, there was a sell-off out of the open, but then we pushed to new highs and got to a new high here at the end of the day. So there was a little bit of a pullback out of the open, and then we pushed to a new high, pulled back again, held VWAP, and pushed to a new high, just a couple ticks in front of our next scaffolding area. So here's the thing. One of the major levels we talked about being resistance this morning, if we could get through 50% of the previous week, we were talking about the scaffolding. We were talking about the 61.8 retrace here at 44.65, give or take a tick or two. So what happened? They came right to scaffolding. There was not really much of reaction, right? And then came up and then got the biggest rotation of the day right off that 61.8 retracement. Pulled back, like I said, basically held the VWAP here. Of course, they had to peek through, probably take some of the longs out, take the stops out of some of the longs, and then took it to a new high for the day, right? So that's basically taking our higher time frame signals. And what happened to my 60-minute chart here? Taking the 60-minute signal, taking the 4-hour signal, taking that daily signal, and because we actually broke the high of the candlestick, that gave us the potential signal, expecting the continuation higher coming into this morning. And so that kind of wraps up what we do here in terms of finding a bias for the morning, waiting for those days when the stars start to align for a specific direction based off of a signal. And then we're looking for very, very, very strong levels in the market to find areas to get trades for rotations or supports, depending on where we are in bullish or bearish. The final thing that I forgot to mention is we like to come in and look at our shortest time frame to see where we are in relation to the 200 moving average and our fast moving average. And all I have to do is zoom out and show you how many times we literally hold that level nearly to the tick, that 200, right? Now it's gonna not work every time, but when it works, it typically works for a rotation within a few ticks or a few points, right? So when we fail below it, we get beautiful plays off of it to the downside. When we start to get in strong moves to the upside, we get beautiful holds to the upside off of it. In fact, that's what happened here at the end of today. When we continued to try to break out, we came right back to the 200, and then at the end of the day here, came right to it and attempted to bounce again, right? So we look to see where is that 200 in relation to current market price. We look to see where our fast moving average is, and then we look to see where VWAP is. And those are those three moving averages that we look at on, and they're all built off of the 512 tick chart. Now the VWAP is always going to be the same no matter what time frame you put that on, right? So if you're looking at a 60-minute chart or a 512 tick or a 1,000 tick or a 2-minute or a 3.5 minute, whatever it is, that is always going to be plotting in the same area. So I've got this plotted on my 3-minute, my 30-minute, my 10-minute, my 512, and the reason we're looking at VWAP is because VWAP is a very, very, very strong area in the chart. There are people who only trade with VWAP, and they trade, and I might be simplifying it a little too much here, but basically they want to be buying tests from the top end to look for a continuation of the upside, or they're selling the back end, or they're waiting for the bulls or the bears to hold this level, and then they're developing a trade in the direction that they would expect because the market's trading above VWAP or trading below VWAP. And again, we see holds off VWAP nearly to the tick every week. Sometimes it will be every single day. Sometimes for a day or two it won't work very well, but then you'll see this type of setup right off of it. Again, retesting it, one tick in front, bouncing out. In fact, that reminds me of a setup that happened here off VWAP on Sunday. So coming into the open or coming into the Globex session on Sunday, this, my friends, is one of our textbook trade setups. This is Sunday's Globex session coming into the beginning of this week, about 4 or 5 p.m., 6, 7, 8 p.m. on the East Coast. We come down, come right to VWAP. It's actually also a beautiful 50% retrace of that leg to the tick, and then we fail, right? So this VWAP here, again, even right out the open, we pull back, we hold it to the upside, bounced out, came here, it actually kind of did a little something and then came down, and then we held it here for the push down. So that's why I watch VWAP. It is a very, very relevant level on the chart, and we see day in, day out, beautiful reactions right off of it. In fact, this was VWAP and 50% of the previous day with a confluence there, right? So are there any questions? I mean, I went a little longer than I really anticipated here, but I'd like to stop and see, does anyone have any questions that I can address?
Hey, what are all the indicators that you're using that wasn't proprietary? You talk about VWAP, you were using Fibonacci. What was your whole list?
So, well, the only indicator I have is VWAP and the two moving averages, and then down here is the relative volatility index, or RVI. So this is, for all intents and purposes, an RSI indicator at the bottom that I'm using to determine divergence between what the indicator does and what the candlesticks are doing, or what price is doing. So this indicator down here is really, for all intents and purposes, is the only signal indicator we're looking at. And maybe what I should do here is go ahead and type it out here. We've got RVI, which is relative volatility index, and it's very, very similar to RSI. It is not going to plot the exact same signals. It's not going to plot at the exact same level that RSI is, but it's nearly the exact same calculation. There's just one variable that has been changed. So that's the indicator you see down at the bottom. And then let me move this back here. The pink line is VWAP, right? So just a standard order flow VWAP on NinjaTrader. There's nothing changed about it. It's got all the standard settings in there. And then we've just got two EMAs, exponential moving averages, very basic, 200. We got the 34 up here for the fast moving average. And that's it in terms of indicators, unless I'm forgetting something. And I'm just noticing now that there are some questions. So I don't know if we have enough time to cover them, but.
Yeah, you can cover any question.
Okay, so I have a question here from Richard Eisenberg, and he's saying, don't swing trades require significant margin? Well, yeah, I mean, if you're going to be looking for larger moves in the market, you're going to have to accept more risk. However, the caveat to that is if you can catch these multiple time frame signals when they're forming, again, trying to anticipate the daily signal and seeing the hourly and 4-hour closing and giving you a nice clean confluence of signals from a level, you're giving yourself an opportunity to get in at the beginning of a potential move. So you're really mitigating any additional risk you would have to take, because if you can get as close to the low of the rotation as possible, which you can do within the first few hours of that rotation, once that hourly closes, you can set yourself up for a large move and basically keep that risk as tight as is possible. So that, in my opinion, is the advantage of doing this multiple time frame analysis before you start to trade in the morning. Is some mornings you're going to come in and actually be right at the scene of the crime for the rotation and be able to anticipate it. Remember, we don't know what's going to happen next. So basically what you're doing is you're saying all the conditions are there to make that make sense for a possible rotation. It doesn't mean you're guaranteed a rotation. Doesn't mean it works, 100% of the time, 75%, but it's getting you in on a move that could potentially be the beginning of a pretty significant pop. What's the other question? How long do you spend pre-market? And I'll just bring them up, I guess. How long do you spend pre-market to prepare, and what two indicators gives you the signals? So we spend about a half hour doing the pre-market, and that might even include a review of what happened the day before. So we're spending about 30 minutes, a little less than 30 minutes, preparing the charts, getting all the levels on there, just determining what signals make the most sense, if there are any signals that morning, and then going into it. What are the yellow, green, red dots? So these dots, and so people are asking about these dots you see, and let me get rid of that, take that off the chart there. All these green and red dots are where we got signals. So that's a green bullish signal. There's a red bearish signal. I didn't get to mark any of the ones up from today, but these are just divergent signals from the lows and from the highs. Hey, thanks, Neil. I appreciate that. Let me just see if there's any other questions. Does anyone have any questions that I haven't addressed here? I think there's about 20 or 25 of you left in here right now. So just seeing, let's see, Chris Brock. Yeah, so this will be recorded. And finally, I should mention here, let me go back to my presentation. We do this every morning. So we have the S&P Roadmap service. If you go to that website, www.sproadmap.com, we do trade every morning. We map the charts out. We establish the most important signals and levels that you're going to want to trade with. And then we also meet once a week and do a weekly webinar. So we cover trading strategy and we review anything pertinent that happened that day or that week, including setups or trade strategy information. And it's an open webinar for you to have direct question and answer with me. And then the S&P Roadmap service also includes our streaming charts. So this 512, I probably can't pull it up. Here it is. Our 512 chart, this will be streaming with all of the signals that you see forming down here, right? So these are divergent signals that are printing on the chart in real time, along with our 3-minute and our 30-minute charts. Those are streamed all day long for anyone who has subscribed to the service. And then finally, we have all of our reviews. So every single day, I try to go in and upload a review to YouTube and go through exactly what we talked about in the pre-market session, and then see how things played out off of the levels we look for, and see if the signals we were harking on were actually getting any follow through. So I would go, if you have any questions, some people are asking, hey, how do I find out more about this? Go to sproadmap.com. And then if you want to check out the videos, it's the YouTube channel, JT Futures. All right. Now, RVI is a standard NinjaTrader. Let me see if I can pull it up. I don't know what just happened. Oh, here we go. So it's just a standard, well, I don't have it in here. This is why I customized it. There's a standard RVI indicator. So if you go to indicators on NinjaTrader 8, and almost every other platform should have this. If they don't, you might have to stick with the RSI, but you just go right down to RVI and there it is. And there's no special parameters. It's just a standard stock RVI. The only difference that you see on my chart here is I've got the 40 and the 60 lines marked because those that's kind of how I trade my RVI. And that should cover that. So Chris, if you don't have NinjaTrader 8, it's possible your platform has RVI. If it doesn't, it's, you know, you could probably find a download for it. If you can't, you could always stick with RSI, which is probably the more widely known oscillator. And let me see if there was any other questions. Looks like there aren't any other questions. So what I would just urge you guys to do is if you have any other questions, you can find out how to contact me on the SP Roadmap website. Please go to the YouTube channel, watch the reviews, see how this stuff plays out every day. I'm personally blown away nearly every single day with how accurate the levels are and how consistent the signals work. You know, the signals are a thing that that's the caveat with signals is they're not always going to follow through. So you always have to understand how to trade the signals and how to change your hat and maybe trade the opposite of it when things aren't working out. But I think that covers it. I don't see any other questions. So Dave, if you want to wrap things up.
Yeah, so we want to thank Justin for joining us today. The link to SP Roadmap, it's right there in the chat. You can click that link. I'll include it with the recording. And again, the recording, assuming it processes fast enough here, I'll have it for you at the top of the hour. So we want to thank everyone for joining us. Thank you, Justin. And we'll see you guys. We'll see you guys at another event.